So let me start with Kenya. Um, from our point of view, we haven't seen much of challenges in terms of accessing our foreign currency. Yes, the rates have changed, as you have noticed throughout the year. But in terms of access, we didn't face any challenge. And from an Ethiopia point of view, I think, as you know, the funding that we have provided so far was mostly through equity, and those equity funding has happened through uh, hard currency. So it's a challenge for future, but as we speak, I think the operation is managing that part quite well because there is enough availability of hard currency through the equity contribution from the consortium members.
And is your policy going forward, given all the volatility we're seeing with exchange rates, is the policy going forward to be trying to keep as much of the local debt in the currency of the country you're operating in? So, Ethiopia operations, BIR debt, Kenya operations, as we saw with the conversion of the bridging loan, that $400 million bridge loan, converting a big chunk of that into a shilling-denominated longer-term facility.
Absolutely. And that's been our clear focus from day one in Ethiopia to make sure that the contracts that you're signing and the services that you're taking in Ethiopia correspond to payment which is in local currency. And we are very, very deliberate on that. So you're right, that's our clear strategy. And similarly, yes, for Kenya as well, our revenue is in local currencies. We have to ensure that the payments that we make also correspond to that revenue. And that matching is actually helping. And that's one of the reasons why we try to make sure that the syndication happens mostly in the local currency.
We've now essentially had 2 straight years in which, on average, real incomes across households have been eroded in 2020 and 2021. Inflation is rising, households also struggling to cope. In that sort of environment, what sort of key changes are you expecting to the spending patterns among your client base? And should we anticipate any freeze or any cut in tariffs in 2022?
I mean, over a period of time, if you look at our realization per minute or per megabits, we have been rationalizing our prices. And that even in last financial year, we have done that. You see our numbers, you realize that both voice and the mobile data prices have come down significantly. And that we continue to do that. Because our clear objective is to make sure that our products that we provide are affordable. And as we are expanding footprint, as we are expanding the base, it's quite natural that that's how it will play out. Now, beyond that, you may have seen last year the increase in the tax, and of course that also has resulted in us as an operator absorbing some of the tax which we passed on to the customer, especially in the mobile data. And of course that has also impacted our revenue growth.
Let's assume, for the sake of argument, that given what we're seeing now with government deficits, we've been running deficits of 8% relatively consistently for the last 2 or so fiscal years. The next one might essentially be the same. If these proposed tax hikes do go through Parliament and they do get approved at government level, would Safaricom be able to absorb part of that tax hike, especially with respect to data costs, or would essentially have to just pass on all of them to consumers?
So it's difficult to comment at this stage, but in general, as you have seen in most of the industries that operate, the tax is something which gets passed on to the consumer, because that also is an impact. That's how sometimes the products become very expensive, because it's just a pass through. So it's very difficult to say to what extent we'll be able to absorb. But in general, the principle is that tax is something that is a pass through. So we pay and we recover from the consumer, and that's how I think I would like to leave it. It's very hard to speculate at this point in time, how this will play out in future.
I know one of the things that Safaricom wants to do in future with respect to M-Pesa is to essentially expand it into other finance lines, and insurance tech is one of the things that is a focus for the company. Can you walk us through your plans in that space?
I think what we've spoken about is subject to regulatory approvals and also subject to having credible partners. As you know, we are not allowed to offer those services directly, so we always operate to partners. So subject to approval and subject to having right partners. We do have ambition, not only insurance, we do have ambition in wealth management, and also in other areas. Now, The market is quite underdeveloped, both in the wealth management. We believe that, from our point of view, we have been operating in the areas of financial inclusion, and that we have done. I'm sure you understand that we have done a very good job in financial inclusion. Now moves to financial health. I think the wealth management insurance comes into that area, but it's too early to talk about it, as we don't have, we really don't have any partners or service offerings that we have now, and also we are working with the regulator to get the right approval. But as we have launched our super app recently, as you have noticed, the partners can come in and actually do have these mini apps. They get integrated with our super apps and they can offer those services to our customers.
Are there any pilot programs that you're running with respect to these two product categories, with respect to wealth management and insurance, that might inform the product rollout later on, maybe in 2023, 2024?
Yeah, wealth management for sure. We have tested the product, so it's definitely piloted.